have to go get that. I can't do this. Hello. Yeah. She got it in here making love. She wants pizza. I can't do that. Go here, guys. Good night. Hello? Hello? Good night. Hearing anyone? Hello? Everybody muted? Hi. Hello? Good night.
Good night.
Hi. I received some of y'all assignments. I didn't receive all.
I never got the assignment, Ms. Smith. Sutherland. I never got any emails.
Oh, let me look. Miss Roberts, did you get the assignment? Miss Sutherland, I will look, and if I didn't send it, I will send it to you right after class. But I thought I sent it to everybody.
No, ma'am. Even last week, I never got the email saying the class was canceled. I got no emails.
No?
No,
No,
ma'am,
I
told
got
you.
something from you saying that you was by best if we were having exam.
Yeah, yes, ma'am. And
Well,
the
who said,
lady, sorry,
I told you y'all was having an exam?
I thought you said we were having end of term exam on the 28th.
No, and the term exam, classes don't end until the 18th, you know, till the 17th, the 18th, which one is the holiday?
Well, maybe it wasn't end of term, but I guess, probably got mixed up, but I thought we were having some kind of exam on the 28th. But in any event, I still didn't get an email or anything to say that class was canceled. I'm not getting any emails. I even expressed that to the lady at BIFS, and she told me that she would look into it, but I never got any emails.
Okay, like I say, I will look and see, and I will send you the email, but our exam will be on the, I'm just trying to see if the holiday is the 18th. If the holiday is the 18th, exam is on the 19th of April. Because classes end on the classes end on the 18th. Just that's the last day of class. So I will double check. But why you not getting? We have the wrong email or something for you, eh?
I highly doubt it because that's how I got into the class. But
yeah, but you got other emails from me, right?
I have gotten 2 emails from you. One asking if I could have come to the school to take that first exam. And then you sent me my assignment. That's the only emails I've ever received from you.
You didn't get a quiz from me?
That's what I'm saying,
Or
the
you
quiz.
took the quiz at BIPS?
Yeah.
No, you would have to take the quiz
No,
with BIPS.
the first assignment that you would have given to us, and then the email, I'm saying the
Quiz.
email, I'm saying that you sent me 2 emails. One asking if I could take the quiz at BISC, and then our actual homework assignment that you had given to us initially that I had missed.
Alrighty. Like I say, I will look into it and I will send it to you. I will just, if you got that email, anyway, I'm just gonna look into it, and if I don't see where I sent it to you, or even if I see where I sent it, I will forward it again to you.
Yes, ma'am.
So you will have it done for me by Friday. Okay. Anyone else here? Sorry, I didn't have no earphones today. Hello? Y'all could unmute.
Someone else?
I need everyone to unmute because I don't have no headphones today. I don't even know what happened to them. Okay, so we can start class. Any questions, concerns about the assignment? Yes, working today. Well, I need everyone to unmute because I don't have my thing on my headphones. I don't have my headphones. Miss Roberts, were you able to finish the assignment? Hello? Where's everybody else? Same working today. So I don't have my headphones, so I need everybody to unmute.
Yes, I was able to complete it. I'm sending it right now.
Okay. Well, like I said, I don't know if anybody else is coming to class today. So I don't know. We have two more chapters to complete, which is rather easy because one deals with credit appraisal, the other deals with just buying security, what securities the bank holds for customers. So I don't know what time is it. It's 12 minutes after, so I don't know anybody else joining. Yeah. Well, I know y'all was trying to complete the assignment, so I know nobody had an opportunity to read, so yeah. So we'll just see if anybody else, like couple, it's 12 persons in the class, it's only 3 persons here. So I'll just wait another 10 minutes to see if anyone else will join. Okay, let me find this. 7, 2, 4. Okay, should we start? Because like I say, I don't know if anybody else is joining today. Can everyone hear me?
Yes, ma'am. Yes.
So what we're talking about today is chapter 9, which deals with credit appraisal. What, Ms. Strawn, what do you think, what is meant by credit appraisal?
Well, a credit, I don't know.
It's just going through all the
A report?
information, I guess, what you need when you're getting a loan, especially a mortgage loan. Yeah.
Okay.
Okay. So, like I say, chapter 9 deals with credit appraisal.
Okay.
All banking career have been spent in lending and taking securities. So we lend, and the next chapter deals with the different type of securities, the collateral that most banks hold when they give a customer a mortgage. Mostly a mortgage, they have securities. And like we talked before, or overdraft facilities, like sometimes you see persons, some people get secured and unsecured overdraft. It's according to their trustworthiness, how the bank view them. So some people can get an unsecured overdraft facility, and then some people have to put up collateral. Most people usually put up cash, but then some people also put up, like if they already have a mortgage, they would use the equity in their home, and they would use that to get an overdraft facility, which the bank would give them using the equity in their home. And overdraft, so what can we include in a single chapter? What can only be a very remuneratory lending is that is the bank skills, and bank can fall fail if their loans are not repaid. And we know, we see that happening because of the crisis which we had with Dorian and COVID. So a lot of persons we know today has difficulties paying their mortgages and their consumer loans. Moreover, banks can forego profit if they do not seize opportunities for good lending. So the subject is very important. Lending is encompass not only the initial decision to lend, the main part of this chapter, but also the monitoring of a loan or overdraft during its lifetime and the eventual repayment of the loan. The next chapter consider the typical securities for bank lending. And we know, like banks monitor, like banks have, they can always tell whether customers are going to be delinquent. At the first go off, if a customer started to pay and then you see them miss one payment, you call and then they say, I'm coming, they never reach, and then you see two payments. So you know, and so banks make wish lists. The loans department, they will have a wish list. And this wish list says, well, okay, this person is going to be in the 3 months non-accrual loan. So they know when loans are actually going to fall behind. They know, because that's why they have to monitor, and that's why you have persons who are responsible. I saw an ad in the paper recently where they were looking for a 30-day credit person. So the person would totally deal with just 30 days loans that are behind. So, and then you have the 60 days, and when it hit 90 days, it becomes a non-accrual. So only the bank don't take interest anymore. So interest is stopped. This chapter approaches the subject of initial lending decisions by looking at the lending acronym CAMPARI and ICE, which recalls important principles of lending, then describes the modern techniques of credit scoring, The emphasis in this text is on lending to personal customers and to small businesses. The typical lending products are largely for personal customers, and the likelihood is that the initial decision to lend will rely heavily on the credit score. Well, we know, we spoke about it before, the credit bureau is there, but and someone was saying with the credit bureau, the scoring, like some persons who don't even have a loan is, you know, when you do the check on the person, they coming up with loans at Commonwealth or coming up with loans at Scotian. And somebody was saying that sometimes you see where you'd say when you send out for any references or on the customer, you would see it coming up saying Scotia is one, but Commonwealth is also one. So they still have a lot of tweaking to do with the credit bureau to get things ironed out before they could really launch that. And I think they need to do that before they venture into totally launching the credit bureau. If they're having those little issues with persons say, I never had no credit card at Scotia, I never had a card at Commonwealth, so why is it that y'all are saying that when y'all run my credit score, I'm coming up delinquent at Commonwealth and Scotia with credit card? I don't have one. You know? The typical lending products are largely for personal customers, and likelihood the initial decision in lending rely heavily on the credit score rather than the judgmental lending techniques. For business lending, however, where businesses are very different and each lending proportion unique, good. Discuss the lending cycle, state the elements of good credit assessment, explain how lending principles can be applied to different cases, explain the role of credit scoring in personal lending. Old-fashioned lending experts is often used, backed up, of course, by supporting computer analysts or business projections or historic accounts. And you know, with back in the days, you know, persons used to say, okay, I want a loan. And that's when they used to do cross checks with different banks to say, okay, I'm calling around to different banks to see if this person have a loan. And that's what they used to do back in the days. You'd have a person at a bank who when customers want to borrow, one person or couple or two or three persons will be calling the different banks to get a credit update on that particular customer to see if they have a loan at the bank. Because sometimes people say, oh, I don't have a loan. And then when back in the days when they used to call around, you'd find that, oh yes, this person have a loan at Commonwealth and they have one at Bank of the Bahamas, but they didn't disclose it. So when they do the actual check, it comes up. You know, when they call the bank, call back, they say, yes, we have a loan from Andrea Smith. And Andrea Smith did not declare that she had a loan at Scotia or Commonwealth Bank. Linked to this chapter is a case study in a small business lending, which is presented with a commentary based on the Campari and Ice formula. And hot take about shrewd lenders in the past about one branch manager I knew would never lend to anyone wearing sunglasses. He was either very biased or based his judgment on what this might say about a person's character. Unlikely for the manager, the one and the only time that he was confronted by an armed robber, the robber was wearing a sunglasses. So we see why that bank manager was very biased, because a robber probably robbed him. So anybody who come in the bank wearing a sunglasses, he was biased to say, no, I'm not giving that person a loan. He judged the person but just because them wearing a sunglasses. So that was his way of judging their character. The lending cycle. Anyone have any questions, any input?
So far, straightforward.
Miss Roberts, I'm not hearing nobody else. Miss Roberts?
Hi.
I said, any questions, any input?
No, everything you read so far is straightforward.
Okay. Unlike most products sold by manufacturers and retailers, the credit facility has a life cycle, which means that the banks are able to determine the profitability of an individual loan until it has been fully repaid. Although there are accounting methods used to estimate annual profit, the credit crunch has shown that these can wipe out by subsequent losses on loans assets previously thought to be safe and secured. And like we know, nowadays, nothing is safe and secured. No job is safe. Banks can give a customer a loan today and say for 5 years, that customer continue to pay as the agreement. But like I say, we all know, just look at COVID and look at Dorian. I've been paying good for 5 years, but these disasters happen and crises happen, so I'm not able to pay. So unlike before, banks might have been able to predict that, okay, yes, this loan will actually stay on the books until and the customer will pay until the loan is totally repaid. But you can't do that anymore today because of the different disasters and crises that's happening around the world today. For the retail banker, the loan cycle has a number of interlinked and intertwined stages. One stage, we have debt. Much marketing and credit appraisal effort is extended in the courtship stage, where managers seek new customers or to provide new products to existing customers. Birth occurs when a loan overdraft, or other credit facility is granted. This chapter gives an overview of this process. Like it said, we have the stage of that when the loan is fully paid off. Then we get a stage where banks trying to get new customers, because old customers, unless they have enough equity in their property or unless they make a good salary and can qualify for an additional, say, a further charge on their loan, that's just the bank has to, the only way they can survive is by continuously bringing new customers into the bank. Because even though, like I say, old customers, the only way they can get more funds or increase the bank portfolio is by if they have equity in their property, or if they make a good salary, so they have room that they can borrow and qualify and to make sure that their debt service ratio is in line with what central bank and what the bank has set forward. A loan then has a lifespan which is expected to end successfully to end in a successful repayment, in which case the bank could see to lend again to the customer. So we know banks come after customers when they look at the actual schedule of repayment, and they say, well, oh, this customer pays well, so they're just about completed. So, they start coming at that customer, sending them a little notice or calling them and asking them if they need anything. Do you need a car? Do you need this? Or do you need that? So they know the customer's soon finished repayment. And because the customer was a good customer, they have no issue of giving them another loan. Life could otherwise end with the loan facility being renegotiated or refinanced over a different term or within a different courtship, birth, life, rebirth, renewal. Because we know some persons, because of COVID, because of Dorian, a lot of persons were not able to meet their commitment. And because banks look at their past history and see that, okay, this person was a good payer, but I guess something happened and because this happened, so now the person not able to, but they was a good payer. So what they would do, instead of saying we're gonna put their house up for sale, as long as the person can qualify, what they would do, they would say, okay, we will do a refinancing on their home, and that's what the bank does for good paying customers. They would refinance it, and even though if the customer isn't, you know, they've been delinquent several times, but the bank know that they struggling and they trying and they feel that they could give them a refinancing and change the monthly payment, change the term, then the bank does that even to customers who have not been, you know, who mortgages or loans have not always been up to date. Repayment schedule, perhaps because of difficulties encountered by the customers. Some loans end in debt, where the customer failed to repay and may even go through a legal mechanism such as court actions or insolvency. Often these loans result in the bank not obtaining full payment. Lesson learned from unpaid loans are fed back to those managers marketing and granting loans at the beginning of the loan cycle. So like I said, I just said, and you see what they call it, a debt. So they call when a person is not paying their loan or can't pay the loan, and you have to go, you know, you look in the newspaper many times, you'll see that, oh, a Scotia Bank, a Commonwealth Bank, or First Caribbean, you'd see them go into court, and or you'll see judgment was granted against this customer, and the bank obtained the property, has access to the property. So the person now has a certain 30 days or 60 days to move out. And so the bank actually got full custody of the property. Because the whole of the loan advance topped up with unrecovered monitoring costs and unpaid interest may be lost to the bank, the individual loan may end up in making a loss and a charge on the bank's profit. Provided the bank can make profit on it, other loan asset, these losses can be borne. Where losses are too great, however, the bank itself could fail. And we know a lot of times, just like you'd see person's car got taken from them, so they owe probably a good $10,000 on the car, but they have to put it out there for bid. And when it goes out there for bid, okay, somebody, the closest bid they get for it is $7,000. They've had it out there for a while and nobody is biting, so the closest bid they get is $7,000. So right then, the bank has a loss of $3,000. Some banks still go after the customers, but if the customer can't pay, what happens is now the loan going charge off. Whatever they get from the, I guess, from the sale of the car, they would just apply it to the loan, and I guess the difference just go in charge off, or they totally write it off. Just because they know, well, hey, we're not going to get that money back, so it automatically gets written off. And like every quarter, all banks know what loans they have to write off, so they make provisions for these loans, these non-performing, non-accrual loans. They make provisions for them. And when they sell a house, they know, well, hey, this is all we're getting, so we have to make provisions for this amount because this is a loss to us. Okay. Ms. Roberts, can you pick up by principles of lending for me, please?
Sure, no problem. Can you hear me?
Yes.
Okay. The principles or canons of lending are generic and apply to large corporations as well as to small personal borrowers. Credit scoring criteria, which we shall look at later, can draw heavily on these factors too. Credit assessment or appraisal was often seen in the past as a dark art, practiced only by old and experienced bankers, often offering life explanation for their decision. However, thinking about the factors necessary to avoid the key risk in extending credit can actually bring this dark art within the grasp of we mortals. In terms of transferable and study skills, a lender needs to be able to assimilate verbal and written information rapidly, analyze data within a specific market environment, communicate effectively with clients and superiors, and reach sound, evidence-based negotiated conclusions. This seems a very tall order. This seems as a very tall order, but as we shall see, this area draws on a number of other disciplines, making it complex, uncertain, but highly rewarding. We saw in chapter 5 and 6 that the FSA recognizes certain risks associated with credit granting. These are largely the risk of non-payment and subsequent loss, but also extend to reputational risk, where it becomes known that a bank is a worse than average lender. Market risk, where a bank needs to spread its lending across different industries and markets. Legal risk, especially where security is taken as collateral, and interest and liquidity risk, especially for large non-syndicated loans. The key risk we are concerned with, however, moral hazard, the risk that a borrower can change the level of risk after the funds have been borrowed, unseen by the lender. An extreme example is where a borrower may wish to start a business and borrows from a bank to do this. Rather than invest in the business, however, the borrower uses the funds to gamble and loses everything, including the ability to repay the loan. The first of these risks is mitigated, but not completely avoided, by gathering as much information about the borrower and the lending proposition as possible. The second risk can be mitigated by using loan covenants or by taking security. It should be noted. Sorry.
1 second, Ms. Robert. Do you think you can sometimes mitigate risk in the climate that we're in now?
I'm sorry, when they say mitigate, what they mean, like avoid?
Yes, avoid it. How can we, like, you could take the security, and like I say, if we look at it now today, with what securities does most bank take now? What securities? As long as you work for government, you can get a loan.
Right. Also,
so what security is that?
A lot of times they require you to bring in a decent amount of monies. Yeah, and then they also ask you to provide, I know with Mortgage Corporation, we ask you to provide us with statements to see, you know, how your saving habits are, or what you have as capital. We also look at insured persons. We like to make sure that persons that are borrowing from us have a life insurance to cover the loan amount. That only really covers if the borrower passes. However, I think in this environment, mitigating, people could faulty up, really, people could put on a show. These facades be heavy. So it could look like they could pay, and then sometimes they just don't pay. But I remember like now. Sorry.
Go ahead.
I feel like with enough background search and doing where the credit bureau is now available, mitigation, it's possible.
You could probably
with the credit bureau.
Hello.
I think so. I feel like the credit bureau would help, because a lot of times, like you said earlier, persons don't say if they have a loan. You don't find out until you actually do that research. So the fact that the credit bureau would be able to provide you with all that information one time, and you could see based on if they have it and they don't say it, that's judgment on character as well. That means you're, I don't want to say a liar, but that's the truth.
But also too, the credit bureau, listening to talks from other students who've had interaction with the credit bureau now, they were saying this, I hope this just a field run that they do in a test run, because if you telling me I have a loan at Commonwealth Bank and I never had no loan at Commonwealth Bank, so they have to also, before they actually put this credit bureau into really in live, they have to make sure they do this just a test. Because if I'm hearing some of the stories I'm hearing, they have to do tests on this credit bureau before they even think about bringing this, because they'll have a lot of lawsuit on their hand telling people that, oh yes, you have a loan at Commonwealth and Scotia. Miss, I don't have no loan to none of them. Oh, you can tell me I have a loan. I don't. And then when they do further, and then they have to, I think somebody said they have to pay to get the credit done. And then they have to wait so long. If what the person saying that they don't have a loan, they have to wait again for them to go back to that bank and for the bank to come back and say, oh yeah, no, the person don't have a loan. So I think with the credit bureau, they have to really, really make sure that testing is properly done before they even come to the market to talk about their life. And and when I was talking about securities, like I say, you know, most companies, banks, or companies who lend money, as long as you as a government worker, or as long as you could get salary deduction, they will give you a loan. If me or you who can't get salary deduction walk into their establishment to get a loan, you can't get salary deduction. No, we can't give it to you. But at the end of the day, most banks have experienced where persons has actually left the country and gone. You won't get no more government salary deduction for me because I left and I gone to the US and I was a nurse in the US, or I left and I gone to Canada and I was a teacher in Canada. So what government salary deduction you getting from me? I left y'all with that big loan. So what? So that's like saying, even when we say we have security, only security to me is safe and secure is when you give me that piece of property or you give me that car and I have that lien on that car and the insurance of me is lost pay. Then I say, yeah, when you get a mortgage, the bank is lost pay on the insurance, not you. They have the lost pay is the bank, not you. So it's still, like I say, it's in the climate that we're in today, it's really, really, really hard because before you'd say, oh, nobody leaves government job or nobody gets fired from a government job. It's totally a different era now. It's not that way anymore. So, you know, I still think it's like, yes, we can do our due diligence and we can do everything to mitigate that risk, but sometimes some things just fall through the crack. And as we say, sometimes people fall, you know, things happen and they can't do anything about it. So that person who is probably paying, and you had everything, but at the end of the day, they couldn't meet their commitment. And then we know before we had situations with persons who have land. And then you come to find out that how much other person own the same land. And because lawyers haven't done their due diligence properly, that's why you'd find the two persons having the same property. Because when they do the title search, what do? They're supposed to be searching to make sure there's no lien against that property, that nothing. That's when they do the title search. And then if I say I have lot number 3, and you do the title search and you say, yes, lot number 3 is free and belong to me when you're doing the documents. But then at the end of the day, somebody else come along and say, oh, I see you building on my property. Lot number 3 is actually theirs and your lot is lot number 2. We've had situations like that where persons build on other people's property. And then we have some persons who would just say, okay, we could switch. And then we have some people who say, no, you build on my property, that house belonged to me. So it's a whole lot of things to take into consideration when we're trying to mitigate this. It's even when we do our due diligence, things happen. You can continue, Ms. Roberts.
Okay. Where was I? Oh, the first of these risks is mitigated.
You was on. It shouldn't.
Okay. It should be noted that in each of the acronyms, the criteria concerning the personality of or character of the borrower rank highly, whilst identification of the security on offer is only considered after repayment has been reviewed. This is very much as it should be. Bad lending propositions do not get better just because security is available. They adverse selection. The fact that the most creditworthy customers do not need to borrow and only those without current funds of their own request credit. Adverse selection is also heightened by information asymmetry, the situation where the borrower has information not possessed by the bank, which could change its risk assessment and should be judged on their merits. And then security sought to provide for unseen circumstances. Sorry, reading this, I feel like I have dyslexia. What is this saying?
Huh?
What is this saying? I just reading and I didn't understand anything I just read.
Okay, what it's saying here, what it says, information asymmetry, the situation where the borrower has information not possessed by the bank, which could change its risk assessment. Well, I guess like what we were saying, the borrower could have, they could have something that the bank, they could have cash too, you know, they could have cash. They could have another piece of property that the bank could actually hold, which will change their risk assessment to say, well, okay, this person, we gave them, because you know, if you look at your mortgage loan, persons who have it, you'll see like they rate you, they have you rated according to how you pay your mortgage. They have you rated as a B, a C, or a D. They rate you. So they're saying like it could change somebody risk rating when they rating the risk rating the person. And then like some companies have where they say they have you in a bracket of 333, that's your credit risk rating. And then some say 345, but they have these different schedules to show what 333 mean, what 345 mean, and that's the way they do it. And then also it could also mean, like you were saying with the credit bureau, you get to find out loans that people have that they don't say, and so they get this big great score. And then when you actually do the check, or like with the credit bureau, or just checks with other banks, you find that whoa, because you know a lot of government salary deduction people, they don't, a lot of them don't have their mortgage on their salary deduction slip. So you would just say, oh, this person have a good credit, they don't have they don't have this loan and that loan and the next, but they have a mortgage loan. And so when a person comes in and they say, well, okay, these are my loans, but at the end of the day, when a banker does a real check, it's, or like with the credit bureau, comes to find out that this person have a whole big $100,000 and something mortgage, but all you was looking at is only deduction was coming out their check, their pay was a loan for $300 and something, which they borrowed probably when 5,000. So you give them this great credit score, great risk rating, but at the end of the day, they didn't divulge that they had a mortgage loan. So the risk rating assessment would totally change.
Okay, understood. Okay. One final word of warning, however, different propositions have different priorities, and so the order of the comparative factors will depend on circumstances. A closed bridging loan where funds are guaranteed to be delivered by a solicitor and which is secured on an existing property will be little concerned with the borrower's character. Extending an overdraft, however, will depend heavily on the customer's past record with the bank and their ability to manage a facility. The following sections discuss the popular acronym Compare-Unites.
Thanks, Ms. Roberts. Thank you.
No
And like I said before, with overdraft facility, it has all to do with the trust and your faith the bank have with you, because you know before they lend on faith, and so it's according to, you know, they look at your past history, how you conducted your account. And like I say, I know a lot of banks give unsecured overdraft facility, where persons can write checks up to $100,000 because of their history with the bank. They don't have to put down nothing. Then you have persons who have to put up cash, or like I said before, people use the equity in their property, and they have a mortgage, but they get a further charge, and they use the equity in their property to actually secure the overdraft facility. Character. Miss Augustine, can you read character for me, please?
Okay, good night.
Good night.
Character. The borrower who seeks to be lent money entrusted to the bank by its depositors must be of the utmost integrity, somebody who will keep their word and who can be believed. In an ideal world, the lender would seek evidence to support the borrower's claims, but often has to rely on the person's word and their own judgment of them. Much relies on a borrower's track record with the bank, or in the case of new borrowers, on the lender's skill and experience in interviews with borrowers, or on the borrower's credit history obtained from a credit reference agency.
You think, Pat, hold on. Do anyone think this is all, that this is all you would need to determine a customer to say that that customer will be a good payer?
No.
No.
Because like I said before, yes, that customer might have paid to the other bank or might have paid you because the loan was smaller. Now they get this bigger loan where the payment is much bigger. So even your track, looking at their track record, it's fine. But at the end of the day, because the commitment is a lot more than a consumer loan was, it still doesn't really say, well, okay, yeah, this person can pay. Because like I say, a lot of times people, you'd find that people, and again, because banks, I guess, just like you just say, you looking at the customer character. So you just saying, okay, this person is kind of trustworthy. So you have persons who have a job, they work at the bank or they work at a company. And then for them to qualify, they need to make a certain amount of money. So what they would do, they have a friend who have a company and they would say, okay, can you do a letter saying I work for you and I make this amount? And people do that. And so when they do that, other than them not knowing, they're hurting themselves, because at the end of the day, the bank is taking into consideration these two salaries. And what happens at the end of the day? Only one salary coming in. So when the bank chooses to lend you that money, they say, this is your payment. Your salary is this. You know you at least make this because that person lie and give you that letter, say you work for them. So how you gonna recoup the additional money that you actually need to make the payment? So right then, that loan is gonna be defaulted. You're gonna default because you only have one salary, but because you wanted this loan so bad, you went to your friend who did you injustice because they're not your friend, because they give you this letter saying, oh yeah, he's worked for me, he's made $400 a week with me. Then he have this job where he is must see $600 a week. So hey, the bank looking at you and say, boy, you could qualify for plenty, because guess what? You make 4 there, 6 there, man, you could qualify. And what happens at the end of the day? They give him this big loan. He and this make 6, so he don't make no 1,000. So when they give him this loan to match that $1,000 payment, salary that he say he have, what happens? And you have a lot of people default like that because they choose to lie to the bank. And so we could say we know them, track record, character, but it's still, because in the climate that we're in today, it's like, it's really, really hard to really determine just from my interview with that borrower, if they're going to be a good payer. It's hard to determine, even if they're good paying their consumer loan the way it should be as a range. But you giving them a mortgage loan now, that's a total different kettle of fish. And as we know, houses are harder to sell, so cars are easier. So if you have a consumer loan for cars, it's quite easy. But a mortgage is, getting persons to qualify first, getting persons to be able to make the down payment. So all of that is taken into consideration. And we know when somebody has to purchase a home, you have to look at all the closing costs, legal fees, administration fees, government stamp tax. So, selling a house is harder than just selling a car. You can go ahead, Miss Augustine, for me.
Modern credit searches will not only reveal past good and bad behavior in repaying loans and managing credit card debt, but will also reveal the extent of a person's borrowing capacity, how many credit cards and loans they possess. The greater a person's access to further borrowing, the higher the sensitivity to interest rate rises or personal circumstances changing. For business borrowers, annual accounts are often a source of detailed information about the historic trends for the business. This text is not intended as a lending text, and so considerations relating to company accounts will be left alone. Suffice to say, however, that accounts for small businesses are rarely prepared for the banker. Much more likely, they seek to reduce tax liabilities and so may hide or defer items that the banker would expect to see. Importantly, the bank interviews the directors and managers of a business and must also form a judgment about their character and abilities. Often, bankers will seek corroboration of key accounting data such as turnover, perhaps via the bank account and stocks, possibly by making a site visit to see the assets for themselves.
Okay, anybody concerned about this? This this area that Ms. Augustine read, when they talk about credit card and debit card and debit credit card debt, I could be on a credit card for someone else because you could give a card, you could say I give a card to someone else, and so I have that debt too, because guess what, my name, I'm also a co-owner of that credit card, but I'm just a co-owner, so maybe my name may not show up as having that credit card. So people learn how to actually run around the system, whether yes, borrow, banks can do their due diligence by doing everything, but person still gets around by cheating and false information, and so they still get around and be able to get a loan. And at the end of the day, even though you may get over the bank, at the end of the day you still lose because you're not able to actually meet your commitment. And what happens, you can drive around every day and see how many houses are buttoned up and the bank has them all buttoned up and the yards are overgrown because of what? Persons who really couldn't qualify. You have some people who genuinely qualified and was paying their mortgage, but circumstances happen and they fall delinquent, and it happened. Go ahead, Miss Augustine.
Ability. This is vital for business, whether or not loans are involved. The borrower must be at the very least proficient, if not an expert at their job or in their profession. Is there any hint of incompetence? If the customer has been with the bank for many years, there should be some clues in the bank's database, but if the request is from somebody unknown to the bank, certain but tactful questions must be asked at the interview and evidence sought by way of testimonials or qualifications. A baker who has had years of experience in working for a large bakery may wish to start up a small bakery of his own. Whilst their technical credentials may be unquestioned, their ability to manage others and to run a business must be reviewed. Means or margin. How much of his or her own money is the borrower using, and how much belonging to other people, including the bank? These figures will be apparent from the request from the customer, and it is important to remember that many borrowers underestimate the amount that they need to borrow. A good rule of thumb would be that a bank would not wish to put in more money than the borrower. The bank takes an equal risk on the success of the venture, unless secured, but only receives interest on borrowings rather than a share of profits. How much money is being put into the project by the borrower and how much by the bank and other lenders? The latter could include an HP company or finance house. Business customers often finance themselves partly by delayed payment for goods and services bought from their suppliers, but accepting only cash payments themselves. A review of the current liabilities of a balance sheet will give the banker clues here. Family finance is also a source of further borrowing, all of which must be repaid at some time.
Thanks, Ms. Augustine. Like we know, like I said before, we can look at all of these stuff, but because of the climate that we're in today, nothing is secure. No matter how much we do our due diligence to ensure that all the information we need, the person meets the criteria, it still has something to do with, we're in a good place now with COVID. We're now at a level 2 or under. And so now business, you can drive down Bay Street and go by the store market. You can look over the bridge and all you see is tourists. So we know, and the taxi drivers out there now, so we know business is really booming for people now. But like they say, what, China? Whoever have that wave going on over there, just take one or two of them to come in, what happens again? And so that's what I'm saying, you know, in the climate that we're in, we just have to ensure that we do some kind of savings. And like I say, people always think savings is, I put $500. A savings is where you are consistent. Even if you put $100 a month, but if a bank could look at you and see you have been consistent every month, $100 is there. And that person who put that $500 a month, but keep going and dipping in it, the bank looks at you as being a more trustworthy or customer that they need. They won't look at that person who put in that $500, because just like they put that $500 and 3 weeks later, they come take out 4, then they come put 5 again, then they come again, take out 3. So the person who's saving that $100 a month is the person who is consistent with their savings. Purpose. The purpose of borrowing is extremely important. When personal loans were launched in 1958, a loan for a holiday would have been rejected because the loan purpose was unacceptable, not necessary, but luxury. Today, a 12-month loan for a holiday will often be agreed. Increasingly, banks concern themselves far more with the ability to repay rather than the purpose, especially for personal borrowers. Don't you agree? The bank don't concern. The bank is be telling you, back to school, come get some money to take your children, buy your children uniform, back to school. Or they also say summer break, come get a loan for vacation. So bank encourages people. Back in the days, they didn't, what? They don't want you come getting no loan, but you come for a loan for holiday, you reject it, not now. They only want to be concerned that you able to pay the loan. They ain't no worry, but you coming to get a loan for, you getting that government salary deduction or that deduction. They mind. You want a loan, they give you a loan for that. Or if you want a loan for wedding, no problem, we give you a loan for wedding too. And what happens? That's nothing tangible but that. So the bank don't care. You've been on the vacation, you had fun, you better pay that loan. And if you can't pay that loan, what they get? Oh, we get your government salary deduction. So that's all they need. So they're not concerned like back in the days where they were concerned that you come in to borrow for a vacation, or you come in to borrow for a wedding, or you come in to borrow for a funeral. You know, people do that. They go to the bank. I came to borrow money. Oh, my mommy died and I need to bury her. Do you think you would go to the bank to get some money because somebody died, or you having a wedding, or you want a vacation? Any of you?
Not me personally, but many persons do it.
I just found out that people actually do that. I think that's the worst, the poorest financial
But
decision.
people do it. They do it, and the banks.
I know of a lady. I know of a lady. She worked in the hotel, so she was target. She took those funds, went away to one event they was having. The best thing she did with that money was bought her kids some snacks. And next couple months, she was trying to figure out how she gonna pay this bank back this money.
Yep.
But I have a question, because where I work, we're not a commercial bank. We only offer mortgage services. So we don't have to meet particular targets as it comes to heavily getting loans. However, as a bank in a commercial field, and you have to make these targets. My thing is, if you're going out there and you are targeting people that make a certain amount of money, and you book the loan, you get the loan, but then the loan is a bad loan because the person can't pay. How does that work? Because you're meeting that target to make that sale, but then it's not coming back because persons can't pay. So how does that work in the commercial?
Agreed.
As a bank in the commercial field?
At the end of the day, the bank still look at that officer, and some of those just get called. Some of them get called in. The bank will still look at that officer. Mind you, But the manager trying to put the officer under the bus, but guess what? You approved the loan.
Right.
That's what it is.
Or
But
sometimes they just let it ride on to collections.
Right, because they be like, oh, I ain't gotta worry about that. I ain't got
Yeah,
nothing to do
I
with me.
already booked the loan. I already given the money. That ain't my problem
Right.
no more.
And they look at their boss and say, but you approve it. It went to they have another step it go to, and they approve it. So what y'all want me to do? And that's what happens. Yeah, because the person, like I say, because banks nowadays make it so hard for staff who have to give loans. They have to go out there, beat the terrorists. Oh, girl, you need a loan? Girl, I really need this loan, but girl, I know you need one, go on vacation. So the poor people, girl, we could give you that loan.
All them
Because
loan
they got to meet
officers
the
see
target
is
of
dollar
300,000 a month.
They
Yeah,
only see
and
that
then they get it,
person as
and then
dollar
they get it.
signs.
They get incentive from doing it. Remember now, when they meet their target, if their target was 300,000 for that month, they meet their 300,000, they getting some kind of bonus, some kind of incentive for meeting that target. So what you think? They ain't care if they leave you with $3. That's your business. They come just like the insurance agent. They come, sell you the insurance. You ever see them again? They don't even tell you the whole full story of the insurance and what happens at the end of the day. You right there
Yeah,
thinking.
you see them again when time to collect that monthly pay. That
Exactly.
policy
But
money.
For those
But
ones,
with insurance, I
ones-
feel, sorry.
for those ones that you pay like by they come to collect, but what happened to those ones who have standing order payment?
Or you don't
Every
see
month
them.
that's
You don't
standing
even
order
hear
coming
from
out.
them.
That's what I said. They don't even come and bring your calendar at the end of the year, beginning of the year.
No, you have
And
to
they
go
the
to
ones
the,
you
you have
say-
to go to the office.
That's what I said. So they just get, just like some loan officers, they book the loan. And all they do is when, if you go and they don't know you could go to, you can be a delinquent loan, you know. They could know you could be a delinquent loan, but what they do? They be, but I have to meet this target. So they got to meet the target. So they really ain't hurting their head, but whether you can be delinquent or not, they don't care. But they know they boss, they could be in the red. Because I remember a bank that I worked at, boy, and the boss is the guy who was the VP of lending. He used to send it out with your name, and everybody could see, not just to the officers and that, you know, the loan officers and stuff in the lending department. No, boy, he used to send it out. The whole bank used to see, oh boy, that person they meet their target. Oh boy, that next person in, boy, sorry for them, they can get kicked under the bus. And so he is throw them right under the bus. And then I know a couple of people who got let go because they was always in the red. They never met their target. And I guess that's one of their KYA, the E that they had to meet. And so they meet it. Okay, you know, you have this $300,000 target every month. You can imagine every month you have to bring in $300,000 with the limited customers out there because every bank going after the same person. And like we know, Bank of the Bahamas now, when you start working for government, you got to go open the account with Bank of the Bahamas. Not no place else, but Bank of the Bahamas. So, yeah. So, like I say, it's kind of rough, and the bank makes when they put that strain on officers to have to go out there and bring clients in. The officer just, he ain't worrying about what type of client he bringing. He just want to bring you. You have government salary deduction. What, you got a couple dollars left that I could get? So they say, okay, sign me up. And at the end of the day, the person just say, okay, now, boy, I think I want to move to Canada. What they do? They get that $60,000 loan, blow it. You ain't got nothing tangible to show. And where they go, when you looking for them, oh, you asking, go to the payroll department asking why the deduction ain't coming. They looking at you and saying, oh, that person quit. What you can do? All the bank can do is put that in active charge off or active charge off and hope and pray that one day the person come back here and they're able to get their money. So like I always say, no loans now. We're talking about government salary deduction is secured because people now relinking and they just leaving and going to Canada, going to the US, and that's it. So ain't nothing secure. Nothing is secured. Nothing. However, the most important reasons why purpose is important, the concern commercial lending, the purpose for which the loan is used will affect the finances of the borrower's firm, and the cash flow projections for the next 2 or 3 years will vary according to the use of which the money is put. For instance, if a firm buys the freehold of its existing shop, we can expect to see no rent payment in the cash flow projection, possibly a dramatic change. But if instead the money is used to buy stocks, then we should see a cash soon coming in the business from sales of that stock, assuming that the sales are for cash and not for credit. Just like in a further example, they talk about the borrower who borrowed the money, say he going to invest, right? And he didn't invest. What he did, he took the money and gambled it away. So what the bank have, if they didn't have actual real security, if they only had this government salary deduction, and they lend the money to the man, and he say he going to invest, he have a shop, he have a business, and he want to open a business, and he investing, and yeah, mind you, he had a good his history rating was good. Yeah, he saved, and everything else. But then what happens? He have a gambling problem. So even though you're looking at his past records, and yes, up to date, yeah, he was still saving. But guess what? He may invest, but because he have this gambling problem, he tell you he going to invest some more money into this business he have. But what he did, he took the money and he gambled it out. So if you don't have a tangible security for him, what happens? Here again, another delinquent loan. What do you have as a collateral to say if he relink on the loan? What do you have? If you only have that, okay, he was a good customer and you give him a secured loan with a government salary, what happens? The person decide, like I said before, decide that some people just decide. I remember when I work at another bank, the guy told, when the manager called him for the loan, he told her, I'm going to quit my job, so you won't get no government salary reduction coming from me. And he can quit his job. And he tell her just like that, because he tired of calling him for money. And that's what he said. So like I say, in this climate that we're in today, I think banks and other companies make poor judgment when they just hold on to government salary deduction. And I hope soon a lot of banks realize that persons are just leaving the country and getting jobs elsewhere, and I quit. So when they quit, you know more government salary deduction coming in. What do? And these people who quitting have no little $20,000 loan. These persons have like $80,000 loan, and they quit and go away to work and forget that they ever live here in the Bahamas, and they don't check anymore. There are two main purposes why customers requires loan or overdraft: to anticipate income. In addition, the bank would wish to ensure that it was not lending for an illegal or notorious purpose. The bank has its own reputation to think of. Yeah, you may have your reputation to think of, but here again, like I say, because we put so much pressure on the loan officers to go out there and bring in loans. Yes, my friend, he is a drug dealer. Someone else puts up his money. He have a certain amount of money on an account, which makes him look quite legal. And what happens? So I'm saying, oh yeah, I know this person. They have like $100,000 on fixed, man, and they have like $200,000 on savings, and yeah, everything shows that yeah, he on the up and up. But at the end of the day, He's a drug dealer, but just that all his money was filtering to somebody else. And that's why we know money laundering had to come into play in 2000, because of before drug dealers just could go to the bank with $600,000 and just put it up. It was no question asked. And that's what they used to do. As like I say, I told y'all before, I remember walking in my boss office and I looking on the floor and I'm like, well, gee, what is all of this? Loan money, stacks of money. That's before the money laundering came into play in 2000. Yeah, so before big banks didn't ask for, you know, any kind of documentation to say where this money come from. They just took it, even though they know you were a drug dealer. They just took it because there was no stipulation in place for it. Yeah, so they just took it. Amount. In retailing, there is a saying, the customer is always right. And we know that because most of you work in customer service where y'all have to deal with customers. So if a customer comes to the bank and the customer said, they speak rough to you or they was totally disrespectful, can you speak back to them disrespectfully? No, you can't, because the customer is always right, even when they're wrong. And in any situation, we know that, but our bosses just look at us and say the customer is always right. And so we have to follow that rule. Any one of you feel that the customer is always right, or you feel that sometimes the customer is wrong, but you just have to accept they're wrong and give up your right? Any one of you had a situation where you had to do that? Huh?
Sometimes you have to accept it.
Any one of you ever had a situation where the customer come in complaining and you know they were wrong, but you had to just ask as if they was right? Like most of you, like Mr. Marshall, you work at Mortgage Corp. Do you ever had situations like that?
Not that I can recall.
Okay. Any Mr. That's Ferguson? Last name. Baron Ferguson? Okay. So yeah, but like they say, the customer is always right. In retail banking, this can be a dangerous assumption as borrowers often have a need to borrow, but cannot calculate how much is needed. The borrower may ask for the lease, for less than is needed, in the hopes of making the request seem more attractive to the lender, or because the cash flow forecasts are wrong. Many honest borrowers underestimate their cash needs even to acquire an asset. Where a property is to be purchased, have the legal and professional fees be considered, have the running costs incurred before income can be generated been covered. The type of lending, loans, or overdraft will also impact on the amount required. An overdraft should turn over or go in and out of credit, whilst a loan is typically fixed at the outset. This is linked to repayments in the next section. And like we know, with overdraft facilities, you'd see like, okay, say the government, they have big overdraft facilities at the banks, the different banks. You know, a lot of times when government salary have to be paid and it ain't get that, they have this overdraft to cover it. So what'll happen, they have the overdraft. So one day the overdraft could be like 600,000-700,000 in the red. Then the next day they deposit $1 million, so it back into credit. So with overdraft fluctuates, so it's up and down. But like it said, with mortgages or with any loans, it has a repayment schedule. So you know, this is your interest rate. This is my fixed interest rate of 6%. This is my mortgage payment. And if I choose to say I'm paying money to my principal every month, we know that the payment will continuously go down, but you can continue to pay the same payment you agreed to, but you continue to pay money on your principal. So once you pay that money on your principal, the bank ain't getting all that interest they would get from you if you just continue to pay that little $500 that they say you have to pay for 20 years. So when you put that $500 and you break that down to 10 years by putting $500, matching the $500, putting that to your principal every month, what happens? The bank lose interest. They're not going to get all that interest from you that, they forecast that, okay, this person get this loan for 20 years, they paying 500. Oh, look at that amortization schedule. It'll be like, whoa. When you first take out a mortgage and you look at the amortization schedule, you'll be like, gee, well, $60 going to my principal and what? $540, $440 going to my interest. And we know the bank get their interest before anything our principal is paid. So, and a lot of people don't understand that the bank is paid first and your principal money goes to your principal. Repayment and term. How is the loan to be repaid? There are two main sources: from the sales on existing assets, an existing house, as with a bridging loan. Do anyone knows what a bridging loan is? Mr. Marshall?
I've never heard that term.
Miss Roberts?
I've never heard that term either.
Bridging loans is like, okay, say I building a house or I'm building something to sell, like I'm building a townhouse to sell, but I do not have all the funds to complete it, but I have customers who is willing to purchase it. And I can show the bank that I have this where these customers are getting a loan at another bank to purchase my townhouses. So what the bank would do to me would give me the loan, and when the customer purchased a house, the money goes to them. Whatever you owe would go to the bank. And so that's how they do bridging loan, because the bank say, well, okay, I'm going to get my money because that those two townhouses are going to be sold to XYZ. Their loans are already been approved. So a lot of times that's what contractors do, or persons who build in a house, they would get a bridge loan from the bank. So the bank would just cover that loan. From this existing or bridging loan, an insurance policy maturing as with a loan for a world cruise for a customer in his or her late 50s or 60s. People get insurance that maturing, so they say, okay, my insurance is maturing. This is the amount of money that I'm going to get. So I'm going on a cruise. Whatever the repayment source, it must be known before the loan is granted and be agreeable to both lender and borrower. Repayment must not stretch the borrower too far. Has the personal borrower shown an ability to save the amount of the monthly repayment in the recent past? How stable is the employment and the salary? Is overtime or irregular bonus payment included in the income figure quoted? Ms. Roberts, you deal with what, loans?
Yes, I'm a processing officer.
Pardon me?
I'm a processing officer.
Okay, so in this, what they're talking about, you look at all of that when you that's you giving the customer a loan.
What's that again? Sorry.
It says that shows the ability to save. You're looking at how they save. You look at their past monthly repayment. You look at their employment. You look at their salary. Do you take into consider overtime or bonuses when the income figure quoted? You take all of that into consideration when you giving them a loan. I'm not sure you're giving a loan. You say, I've never heard the processing officer.
Well, I mean, I can't grant the loan. I can process the file and put it and consider it for submitted for loan approval. But I don't make the decision.
Okay,
So that's
I'm
why I
saying,
said I'm a processing officer, but
so
yes,
I'm
we do
saying,
take in consideration those things. We take in consideration if you are a hotel worker, let's just say, we use your base salary as your
mhm,
primary income, and then commission, we use 50%. We used to use 85, but we're no longer using 85 anymore. We're using 50.
okay, uh-huh,
We can also look at if if you're purchasing a multifamily, we can look at the potential income of rent. We can use that as a form. I don't think other banks do that, but we can look at the potential income based on what the appraisal states to help you qualify as well.
yeah, other banks do that. They look at, I know they used to look at a certain percentage of your rental income. Okay. For a business loan, does the business borrower cash flow forecast cater adequately for regular repayments and interest? Have all likely costs been estimated and deducted? Are there written quotations for things such as building work? Are there contracts for sales of goods? A common error is for new businesses to look profitable on paper, but forget such things as the owner's drawing or tax liabilities. Here, the lender knowledge of market and environment in which the customer operates is important. An experienced lender can tell if income and cost estimates are valid or if common costs have been omitted. An objective review using the not so common sense approach is often called for. This part of acronyms also looks at the period of borrowing. Personal loans can go to 5 years and home loans in theory to 25 years. We know now home loans, somebody see some banks saying 35 years. Lord, you can pay the bank all the interest. You can pay for the house a couple times. And so some people get 30-year loans, mortgage. You can imagine having a mortgage for 30 years and $1,500 a month. Yeah, but 30 years and all the money going to interest. Probably in the 10 years, you see something really going to your principal. How many people sell their house long before 25 years are up and take out a new mortgage for a new house? In fact, the from income example, the scales of firms' output or wages, salary, or personal borrow or average life of a mortgage is only about 8 years. I know about that. The term of borrowing is related to the purpose of borrowing. Funds borrowed by a company to buy stock should be repaid when the sales proceeds of the stocks are received, usually within months, although fresh borrowing will then occur to finance more purchase of stock. An overdraft is an appropriate form of bank finance here. However, a loan to buy the freehold site of a factory could be repaid over 8 or 10 years. Mona, what is the longest term that the bank gave on personal loans?
12 years. Good
How
afternoon.
much?
12 years.
12 years? Well,
You
I
said
thought
longest term, right?
Yeah,
Yeah, 12 years.
12 for consumer?
Yes, ma'am.
So when they jump up to all of that, Jesus Lord, these people is all that money for 12, and the majority of them don't have nothing tangible.
Nothing tangible.
12 years? Oh my gracious. I want this vacation loan. I want to go to Dubai. Jesus. I get how much years to pay that Dubai loan back. Boy, all I have is them pictures and memories. I ain't get nothing tangible. I guess they say the memories they have to them is tangible. That's all I could say. Do you have a lot of persons coming to borrow money for vacation?
No, I've never had that experience.
funeral.
Yes.
People come to, and how much money they spend for funeral, Mona?
The most I've done is 5,000.
Any for
I've done-
weddings?
Yeah. To go buy the ring. Yeah.
To go buy what?
The ring.
What you mean you got? You could. I hope they buy the ring for $2,000 for the two.
Child, I know, but I know they walk with the dog holding hands, going, but they business.
My Lord! So they spend more than that to buy the rings. More than 2,000?
Yes.
So they just buying the money, borrowing the money to buy the rings. That ain't the wedding yet.
No, ma'am.
I never understood why persons borrow money for a wedding. And then they tell you, when you see them again, they'll be like, oh, me? We ain't together, but you still paying a loan.
Yes.
Then the funeral, why am I gonna borrow money for the funeral? Okay, national insurance is give me how much? 18 something now, I think. Okay, I'm gonna get that something from national insurance, and then I can look and see what else I could get to cremate you. I never know funeral for you. What? I going to go borrow some money so I could put you in the down in the earth because you didn't have no insurance? Would you do that, Mona?
No. Of course not.
Miss Augustine, not Natasha, would you borrow because somebody died and everybody looking at you because you work in the bank and they said, well, you could go borrow the money for the funeral. Would you do that?
Yeah, we could cremate them too.
That's what I saying. And that's what I saying I saw something, somebody sent me something for a funeral that was in Freeport. I was like, they sure that was a funeral? Because everybody was dressed right up. They had their own design. Somebody had a trail.
Funerals are now fashion shows.
I think that's what that was in Freeport.
Yeah, best dress.
Anyhow, like I say, I would think after Dorian and COVID, a lot of people would have, look at life more seriously, especially when it came to borrowing, and say that no, I'm not, because life is things are so uncertain. Look at what's going on in Australia and Ukraine, and it's just like it's too much things are uncertain. Why would I do that? And then, like I say, a lot of people don't have insurance, so no insurance. You can get cremated. Whatever national insurance give me, I probably have to find a couple more dollars for that. You can get cremated. Nobody need to see your body. Nobody need to see your face. Hey, I cremate him. See picture here. That's it. But I guess we just have this fashion thing. When somebody die, I always just tell people, you check the persons of rich white people who have money. You see them as have these big old wedding that we have. I go into the bank to borrow money to have a wedding. I'm not, what? Never. But people do it. So to each his own. For personal lending, a loan for an annual holiday ought to be repaid before the next holiday, but a loan for a double glazing or a new kitchen could be repaid over 5 to 7 years. Loans for plant, machineries, or car should take into consideration the useful life of the asset purchase, as it is likely that the other loan will be requested at the time to replace the asset, and it would be foolish to have a loan outstanding on an asset that has either been disposed of or is no longer of any value. And like we know, they have this number of years when like they say, you buy a new car, the minute you drive the car off the lot is already depreciated by 20%. The car is only worth 80%. So you find that a lot of times I've learned from somebody who is dead now, but this gentleman had money. And he would say, I never buy a new car. He always go away and buy a used car. He would never, if he drive a Mercedes, he drive a Land Rover. It's always been usually never buy it out the paper. Because like they say, the minute you drive it off the lot, it's depreciated 20%. You cannot get what you just paid for that car from somebody because it's depreciated already 20%. Mona, can you read insurance security for me, please? And I'm getting stuff up.
So insurance security, this point is deliberately put last because the decision whether or not to lend should have been made on the other 6 points. Obviously, lending covered by security must be more attractive than you hold on, hold on, wait. Obviously, lending covered by security must be more attractive than unsecured lending, but the availability of the security may influence the lender to agree to a doubtful proposition. The questions which must be asked are, when will the security be deposited? Again, as a general rule, a banker should not extend a loan until the security documentation is complete, or at least until the security has been deposited. Additional insurance in the strictest meaning of the word also needs to be considered under this heading. For companies, ensuring the lives of key directors will be a comfort to the bank. For personal borrowers, is security offered? If not, can some acceptable security be found? Is the security offered adequate? If not, can more be found? What is the nature of the security? See Chapter 12. Who will deposit the security? Insurance to cover sickness, unemployment, or death will also be sought. And ICE.
And
Just a question.
Mhm.
How, I don't know if the other banks do, but how come at Fidelity we do not request life insurance policy?
You mean on mortgage loans, or are you talking about consumer loans?
Consumer.
Well, now some banks do not, like consumer loans. The Commonwealth Bank, I know back in the days, Laurentian, I think they had an insurance company that they had on site, and I think that they had that belonged to them, and I think they still do insure their persons. Yes, some consumer loans are insured. Then you used to have that creditor life. Y'all don't have that anymore.
No.
Yeah, before.
It's not
Kind of like when I used to do
mandatory.
audits, I remember the creditor life, certain customers. Pardon me?
It's not mandatory, but they have the option to get it.
Yeah, but I know with some customers, because of their age, I think Fidelity used to have the creditor life, because when I used to audit loans, you'd find that some customers had creditor life. Yeah, some customers, because of their age, they took out creditor's life. And I think if you check, Mona, you'll see, if you speak with Ms. Fox, you'll see that they still do that. Like I said,
Okay,
when I used to do audits, I remember that. Yeah.
Randomly, I would ask someone if they have life insurance, and I'll put it down, but it isn't something that is taught or to say mandatory. I think the other day, someone called me from upstairs asking if we is whole, Crystal, if we get the client's information pertaining to their insurance. I was like, insurance? She's like, yeah, life insurance. I was like, nobody has ever asked any customer for no life insurance.
Yeah. Like I say, I know before when I used to do the audits, I came across couple files where couple loans where customers had to do the creditor life. That is something in-house that they do with another insurance company. But speak to Ms. Fox, I'm sure she could show you one of those creditor life insurance, because like I say, they did it. Yeah, they used to do it. Yeah. But yeah, and I think that's something that the bank should do. And like I say, I sure a Commonwealth Bank does. Yeah.
Yeah, because when I see persons deceased, They just is write it off, Mr. Boo or Mr. Gardner to prove it to be written off, and I'll be that. I always wanted to know what happens next. Like I've
But
heard
you know,
about
a lot of
Commonwealth
times
Bank.
when
Go
things
ahead.
are written off, not always it's just gone, you know. A lot of times it can be active charge off or inactive charge off.
I
And so a
know
lot of
that.
times they still go behind them customers.
No, but they mark the rim as deceased.
Huh?
They
Or at least
mark
the ones who died. Oh yeah, they can't do nothing with that. Yeah. They can't do nothing. That have to just be written off. And I hope that don't be, yeah, and that's why I say, Commonwealth Bank, yeah, boy. I think somebody was saying who worked at Commonwealth, she was saying even the insurance they have, if the customer defaults or something, she said, she in my risk management class, and she say, yeah, they have insurance. That's what they do. They make sure them customers have insurance. So they,
BOB
you know,
does as
they,
well, depending on the amount.
pardon me?
BOB does as well, depending on the amount.
Okay.
Mhm.
Well, I guess Mona, y'all need to start doing that because the people gonna, and not only that, persons who get incarcerated. I know a couple people who incarcerated and have them loans. What happens to them? They going to jail for a long time. What happens? Because I know a particular person, he going to jail for a long time, and he had credit card, he had loans, and what happened? What happened to that? You know, so what happens? They don't make, and that's why I say certain things. They have, I think a lot of banks have to change the practice and stressing out the officers, but bring loan. So the people just bring loan. And then when they go to VP of lending to approve, VP approve it. But when it comes to delinquent, they come in at the officer to say, you bring this loan, but Miss, you approve it. So were you just as bad as me then? You didn't see the red flag either. That's all, you know. You didn't see the red flag either. Because they'd be trying to blame the officers, but it went to my manager. Then my manager said, oh yes, I recommend it. And then it went to VP of lending and VP signed off on it. So what y'all want me to do? You know, felt it was credit worthy. And now because he fall delinquent, it's my fault. No, it's all your fault. Maybe you and you. But they always is. But that's what happens when you have these targets for persons to meet. They ain't worrying with what kind of loan they bring in. If this person really a good customer, they just trying to bring that loan to make that $300,000 target for the month. So they really ain't worried. And then apparently the VP nor the manager worried either, because the branch got to make their target too. And then everybody got to make their target to get the profit for the bank. So ain't nobody really worried until the customer get delinquent. And that's what happens. So Moni is still meeting them target, I hope.
Child,
You're still there.
This quarter been rough. I ready to go. Y'all ain't ironing. Yeah.
Oh, y'all. You mean these other people?
I
Me,
talking
you
about
know, I
the slash.
Yeah. But we're Pickstock ain't here today. Pickstock said he wanted to come.
Charlie could come.
You can continue, Mona.
This brings us to the income for the bank to be gained from agreeing to the proposition. Interest is the margin over LIBOR or base rate sufficient to compensate for any risk involved for the bank. Typically, risky industries, example, construction, will be quoted a higher margin over base rate, example, base rate plus 10%, than the lower risk ones, example, agriculture, base rate plus 3% or lower. Similarly, larger firms with good credit ratings would exact finer rates than sole proprietors. Lastly, secure loans are likely to be cheaper than the unsecured ones because of the lower ultimate risk. Favorable interest rates are one of the reasons for the increasing trend for very large firms to bypass the banks entirely and borrow directly from the markets. Personal borrowers will be unlikely to have the luxury of negotiating an interest rate. The rate offered will be the bank's published rate, and this will vary depending on the type of borrowing undertaken. But
Mona,
some of these people,
mhm.
they still want to negotiate rate. Even the ones who 110% in debt, 110 in debt, they still want to negotiate rate like they know anything but rate.
That's what I was gonna ask, whether you have customers who say, well, y'all giving me 16, what about 14?
We do. At the end of the day, sometimes I put it on the application, but then if I feel like wasting my time, then I can put the rate, but I know Mr. Gardner is gonna approve of that. But you can negotiate with a bad loan. Which one negotiate on?
But okay, well, we know loans do, and I think too, like I remember a lecturer saying to me, he said, we as Bahamians, we do not negotiate nothing. We go to a bank, we say, okay, I have $300,000. I want to put this on fixed, or I have 300,000 and I want to get a cash secured loan to purchase a piece of property. And the banker say to us, okay, well, this all we can offer you. Okay, mister, I bringing you $300,000, which you can use to lend to other customers beside me. You can lend me, but I giving you this $300,000. You put in this my cash secured, but you can still take this and lend this out. Would you say 8%? No, sir. I want 6 or 5%. He said, because we as Bahamians don't try to negotiate. You try the white person who have plenty money. When they come to the bank and they want something, they telling you, call your boss, because I have $1 million and this is the rate I want. Or I have $1 million in your bank now and it's maturing and this is the rate I want. You call your boss say, okay, who is that, whatever, and he negotiate. But us, we could have $1 million in the bank, and the people, the customer service rep or the manager say to us, well, this is all we can offer. We settle. We ain't never gonna say, call your boss and I want to negotiate my rate. And they do negotiate rates. And so, yeah, I've seen where persons got better rates on their term deposit, on their loans, a cash secured loan, and they got a better rate than you'd see a preferred rate, and it has to be approved by the CEO, but they can get preferred rate. Huh?
Yeah, they can.
Yeah, but a lot of people don't do it. Some people do it. Yeah, but like I say, a lot of people don't. They just settle and said, okay, instead of, and we don't shop around, because I can come to a Fidelity, I can go to a bank in the Bahamas, I can go to a First Caribbean and shop around and get a better rate, like on a mortgage loan.
Go ahead.
No, you go ahead.
I think back then they probably never used to shop around, but I think a lot of Bahamians became more wiser over the years, especially after the pandemic. So I think they're shopping around now. They know who has interest rates and they know who gives back at the end of the quarter to their account. Give back, the interest rate. So I think a lot of them become wiser, because even now selling loan is very hard. It's like, I don't have it, I don't want it.
Yeah.
So that's the attitude now.
And like you said, because of the pandemic, agreed. Yeah. And Dorian. Yeah. So, and it's good, but a lot of persons in government, a lot of them don't do that. A lot of them still, I'd be like, you still borrowing? Yeah, a lot of them still do. And like I said, I don't have nothing against borrowing, as long as you have some cash put aside somewhere else, Hey, I just borrowed them. I remember when I was younger, that's what I used to do. I used to go to Commonwealth and borrow their money and put it on fixed someplace else and then pay them. And so I just pay them. I get an interest to that bank with paying me more, and I paying you a little bit of interest over there. And that's what I used to do when I was younger. I just wanted to test to get a credit. And so I used to go to Commonwealth and just borrow their money and put it on fixed. Yeah. And then I had a boss who tell me never take my money and buy a car when I was going to. And he said, no, you take that same money you was going to buy that car and you put that on fixed deposit and you borrow against that. And when you finish paying for that car, you have that money in the car. So I learned how to do that, you know? Yeah. Continue for me, Mona.
Commission and fees. In addition to annual interest, borrowers may also be faced with commission, sometimes termed as an arrangement fee to be paid when the loan is drawn down. Occasionally, it is added to the principal amount borrowed. The difference between commission charges and interest is that interest compensates the bank for the risk undertaken wallets. Commission compensates for the work involved in granting and monitoring the loan overdraft facility or overdraft facility. For instance, a typical arrangement fee for a $100,000 house mortgage loan would be 500 plus any survey fees, legal costs. The bank could also charge a booking fee for a fixed interest rate and penalties for early repayment to establish an overdraft limit of 1,000 on a current account that typically at 1,000 on a current account, the typical fee would be 25 to 40. You all right?
Pounds, yeah.
Oh,
Yeah, and what we also know, when you get a mortgage loan, what are all them different fees? You have what? Administration fees, you have government stamp tax, which go to the government. You have all kind of different fees you gotta pay. And then you get that legal fees. And when you look at your legal fee bill, the legal fee got a copy of this, a copy of that. They charge you for this. And so the average person getting a mortgage loan is really, really not easy because for number one, the first thing, if you as a young person trying to buy a piece of property or you trying to purchase a house, what happens? You have your closing costs is like humongous. You like some banks do, you find that you have to find so much money. Okay, your closing costs in total you have to bring to the bank $30,000. Well, get it. That's why I come to you all for a loan. Well, get $30,000 from Mr. Marshall at Mortgage Corp. You all do 5%, right?
Yeah, it's 5% down.
So when you put that 5%, does that include your legal fees and all the rest of that?
No, it doesn't.
Pardon me?
It depends. It doesn't, but you can pay your legal fees out of pocket, or you can incorporate it into the mortgage
As long as you can qualify.
as long as you can qualify. But
Oh.
legal fees could be, I think they go up to what, 2.5%?
Okay, yeah, So unless
The
you know the
mortgage?
person who give you a you know, probably a 2%.
Yeah, and then sometimes if they really want to, they could charge you 2.5% on the mortgage and then another 2.5 on the can't remember the next thing they charge you on. So it really depends if you know the lawyer, to be honest, or if you could get a good
Right,
lawyer.
yeah. If you're not a lawyer, you could get a cut. But if you don't, and it's somebody, legal fees is just be really, really high. And then you know with VAT now, all of that added in there. So it's just so much. Younger persons do. I'm not sure if you work in the lending area or you work in the collection area. You in collection? Or
I don't
lending?
work in either of them, but I have some
Okay.
knowledge.
Okay, because like nowadays, customers come to the bank. They, like you say, because they don't have, some of them don't have the closing costs. But you could imagine the bank telling you, like the other banks, like a First Caribbean. I think First Caribbean too really works with people. They say they probably would incorporate your legal fees, your
Yeah, I
closing
saw
costs.
something about that too. I think they were saying they also even do half.
Right, administration fees, government stamp, all of that. They would, once you get the loan with them, they would cut everything in half. Yeah. So they do that. But like I say, the average young person today trying to get a mortgage loan, even with when the new minister of housing, we're talking about the new house subdivision, those houses were 160,000. They're coming through Mortgage Corp, right?
You could use financing through us, yes, but it's not.
Okay.
You don't have to use the mortgage corporation. But when you look at it, based off what you just stated, it would be preferred to come to mortgage corp because a lot of people won't be able to afford
Yeah.
$160,000 mortgage. Like you say, closing costs and
Yeah.
all that other stuff. Even 5% down, 5% down is what we require, but other banks require what? Sometimes 10.
Yeah. And not only that, and then at the end of the day, like I could say my son, his house was, his townhouse was up with the roof on and everything. Boy, when they telling me he had to find that closing cost, that was $15,000+, and his house had all kind of equity in it, and he still had to go off of that 15+. And then I think we forget too the house insurance, because you just have to pay the house insurance up front. And you know, today, house insurance, if you get a mortgage for 200 and something thousand, the house insurance hitting you for almost 5,000, 4,000 and some. So all these things they take into consideration where they give you when they give you these mortgage loan and they say closing costs, all the house insurance, all that been taken into consideration, your legal
You need
fees
to
to
have
the
life insurance
lawyer,
too.
yeah, right, life insurance, your all of that. And nowadays you see the government trying to say they can tax one of the banks to be dabble into these people account mortgages with the real property tax. So that's another story. I remember years ago, that's what they did. When Paul Adley was the Minister of Finance, I believe, they was debiting people mortgages left, right, and center. You know how much bank get throw under the bus for debiting people accounts wasn't supposed to pay real property tax. And if you weren't paying attention to your account, then that real property tax sticked on your account and added to your mortgage loan. Yeah, but and you weren't supposed to, if your loan was under a certain amount, you weren't supposed to be paying real property tax. But some people didn't know, so they never queried it until I guess other persons made so much noise that the bank had to go and look back at the persons who they debit accounts who was not supposed to be paying real property tax. So it's a whole lot of things, like you say, life insurance, all of that, house insurance, all of that is incorporated in that closing costs. And then the administration fees, we know with administration fees, I don't know if it's changed, but if it's a construction loan, it's more. If it's a purchase, is less. Your administration fees is less than if it's a construction loan. So all of that is taken into consideration. Yeah, so for a young person today to really qualify to get a home, it's not easy at all. And it's the same thing abroad, you know, because you find that a lot of persons, if they don't have good credit score, they have no credit score, they have to borrow from a private lender. And when they borrow from a private lender, they have to actually cough up more money. I know someone, they borrowed from a private lender in the US, and the house cost $137,000. They had to cough up $37,000 to purchase that house because they went through a private lender, because they didn't have credit scores, because they don't have credit. They don't like to do anything with credit. All they want to do is purchase, cash. So they just never establish any credit. So they had to go through a private lender. Even when they purchased their car, they had to go to a private lender. When they bought a house, they had to go to a private lender because they don't have credit score. Yeah, so it's just the same as it is here as it is over there. But like I say, it's just that it's so much hidden costs, and then persons not knowing, they just get into the mortgage, and then at the end of the day, they be like, but I didn't know this and I didn't know that, because at that point they just wanted a mortgage loan. Mona, you could continue that portion for me, please.
UK banks were under fire by consumer bodies and the Office of fair trading regarding so-called penalty fees for unauthorized overdrafts during 2007 to 2008. The banks won this particular battle with an argument that the fees were incentive pricing rather than penalties, since they wanted consumer behavior to change and work within agreed facilities.
Thanks, Mona. Thanks. Miss Wallace, can you pick up extras for me, please? Mr. Marshall, can you read that section for me, please?
Are there other products, example, insurance, travel facilities, unit trusts, private banking, which might be offered to the customer? Are there other members of the family or other businesses in the group to which products can be sold? Cross-selling is becoming more and more important as more banks compete for the same customers. To a certain extent, customers can be locked in by purchasing services from their bank. In addition, banks are more able to target services to groups and other existing customers as they have considerable information about their spending habits already. In some cases, the nature of the lending proposition will give rise to a need for the protection that insurance in particular can bring. Life assurance to cover a house mortgage loan is always advisable, as dependents could be left with a loan to repay if the income earner dies, with the loan outstanding. Similar life covers for the company directors are vital to success of a new investment and often offered by a banker.
Thank you.
The weakness.
Thank you. As we know, life insurance is very important. And like now, I think too, boy, they need to bring up a different kind of insurance for when these people skip down and don't pay their mortgage and just skip down on these consumer loans. What do they do then? What does the bank do then? So Mona or Natasha, in the banks, when persons who have left and who had consumer loans where they had government salary attached to it, what does the bank do when the person just up and leave and move away to Canada or move away to the US?
I haven't had consumer loans. I've had mortgages like that.
You mean somebody had a mortgage and leave?
Yes.
Lord, they leave the house?
Yes. Yeah, you have some of them. When you finally get in contact with them, like when you send them emails or you call their references and you finally get a hold of them, they're telling you, oh, I don't live in the Bahamas no more. I live in Canada now. Okay, so who's in the house? Or some have tenants in the house still. So they would make arrangements for the tenants to go in and pay the rent, make the payment. And then some of them, they sell it if they could get a sale for it whilst they're out of the country, or they allow vacant possession to be done on the property.
Okay, so when they sell it, what happens to the bank?
When they sell it, they then send a check. Hopefully they sell it for enough to pay out the mortgage. So they'll sell it and have the check deposited to the bank to pay off the mortgage.
Oh, well, that's a good thing.
Yeah, I have a customer right now. She moved, but she's selling the house. So we're just waiting on the finalization of the sale.
Yeah. Mona, with the consumer part of it, what do y'all do? What does Fidelity do?
Well, with the consumer part of it, I think after first payment doesn't come in, that first deduction doesn't come in, they contact the payroll to find out what happened. If they cannot get a response there, then they contact the clients, but you can't reach them. So then collections would then kick in. I think collections probably visit their house, but
Mhm.
I don't know how much payments are missed before they put it before the courts, but I know you go before the courts and there's a summit. They looking for you, but you're not here. So to just be in the system, they'll keep notarizing in the system. Well, today at 4:44, I visited John Doe residence and John Doe wasn't there, whatever. But it'll just continue to increase. Like I know a police officer that doesn't live over here anymore. He lives in Canada. And his consumer loan is probably about 120,000 by now.
Well, who's give somebody 120,000? What, you mean
No,
120,000?
no, by now, meaning with the interest, with the accrued interest.
What? So how
Yeah.
y'all gonna get that? That's consumer. Y'all was holding on the
I
government
mean,
salary deduction.
the only way we can get that is if we had a house here and wanted to sell it, and when it go before the courts or when they
Yeah,
go
laying
before the
against it.
courts,
So the judgment.
right.
Yeah.
So then they would find out, well, we're looking for you. I know it happened to a guy who moved to the States. I think he went missing for about 8 years. And it was a family home that was left for him and his sisters. And they found a buyer. And soon as he hit Nassau in a roadblock, come, let's go. And his portion of it the check had to be made payable to Fidelity. He didn't get anything from it.
Whoa. Well, what do you
was
expect?
mad, but and that's why I try to explain to the clients, especially the ones who work in the hotel industry, that feel as if, okay, COVID happened, I don't have to pay this loan back. You may not have to pay it back now. It's not gonna go away. It's gonna come to haunt you later on. Like all of us one day want to own our own home or apartments or something.
Right.
But this is gonna come back.
But not only that, like when there's a judgment, once a bank or someone wins a judgment against another person, automatically that judgment is there. So when the lawyer is doing the search and everything else, and to say, let's see if any judgment against this property, the lawyer comes back and say, okay, yes, there's a judgment against this property. You owe premium importers, you owe tops, you owe this other person. And then you have all of this. So you sell this property for 100,000. By the time you left with 50,000 because you know all them little loans. So all of them coming out before, and people don't understand that. Like you say, they don't understand that at the end of the day, you have any property that has to get out, go there and be sold, and lawyers have to be involved in it. The judgment is there. So what you can do? He, like you say, he didn't get anything from it. You got to pay the loan. And like you say, people think loans go away. It doesn't. It does not go away. It only goes away if you die. And nobody want that with you.
They feel as if when you go before the courts, that's that.
Yeah, but then too, like, you have a lot of cases to go before, I remember when I used to have to go to court for the bank. Man, it's to be so much persons in that court who dare for, like, okay, they ain't pay Commonwealth Bank or they ain't pay another place, and they tell the judge straight off, Judge, I can only afford to pay $20 a month, and the judge say, accept it. So you can imagine somebody having a credit card loan, a credit card, and they go on the court for that, and they telling the judge right a point, Judge, COVID, this is all I can afford to pay. The judge look at the person and say, will you accept? Well, the person could say, but I accept, because that's all the man say he can pay.
Yeah, but within yourself as a collection officer, that $20 don't make no sense, because that even clearing up a piece of the interest, you wasting that
even in late fees. That even in late fees. But that's what the person say, and that's why they say, even like when persons like landlords take tenants to court and stuff like that, and the tenants say, yes, I owe him, but you know my situation and I can only pay him this amount every month. That's all I
That's
could pay.
different. That's different though, because interest building up on that daily. I mean, I hope not.
He may be interested in a money mortgage, you know, so that's what I'm
That's
saying.
true.
So as long as you go before the courts and you tell the court judge, I owe Furniture Plus, but Furniture Plus, this is all I could pay. Y'all better keep adding that interest, but that's all I could pay y'all. I can't pay y'all anything else. And
And
that's what happened.
I felt sorry for a lot of persons who had to restructure their loan from the hotel industry because, though, you know what it is. I understand the bank is there to make money, but you know what it is. I borrowed $11,000, and in the space of 2 years, that built up to about 15 to 16,000, and I have to like. I think they should have at least waived half of the interest fee. The accrued
Yeah.
interest. They should have waived at least half if they couldn't do the whole thing.
Those child, the bank is here to make money.
Yeah, but that some of them,
Bank is,
when you restructure that loan, that's more than the principal amount what they borrow.
yeah, agreed. But the bank is here to make money. And that's what happens. The bank is here to make money. And that's what they do. Miss Strawn,
have
can
a-
you pick up? Oh, go ahead, Mona.
No,
No,
I had a question, Miss.
Mhm.
So given with the laws of the statute bar,
Mhm.
if
Oh, you
someone
think it's
moves
run
off
out
the
of,
no, like if someone moves off the island, I'm just curious, and you can't reach them. They're talking about consumer loan now. They have no tangible assets here that you could lean against. And 10 years pass. I think it's 7 years for consumer. Even though
Yeah.
you would have had a judgment towards them,
yeah.
are they still on the hook after 7 years because it becomes unrecoverable at the point, right?
Yeah, but guess what? Some banks, well, I see some stuff where I see people ain't pay no loan for a long time. Like when I used to do audit for the bank. And trust me, them people been in an active charge off and they still there. And some of them been there long and they were still there. I think the bank, some banks don't write off, but I know in talking to this lady who in my risk management class, she's talking about Commonwealth Bank and she's saying, yeah, they just write it off because they have some type of insurance. I'm sure she said something. I gotta ask her tomorrow and I will say to you all what she said to me, that when persons become delinquent or a certain number, yes, something she said, but Commonwealth Bank, they make sure the insurance in place. Don't imagine how much people they give loans to. They make sure you paying for that insurance at the end of the day. That getting paid for because they being covered. Yeah, but like I say, some banks still, because I remember somebody, yeah, man, when I look at those non-accrual, those inactive charge off and active charge off, yeah, man, some of them people been there a long time. Yeah, they've been there a long time and they still trying to get that money back. And like I say, I always say, and they find out when the person have a job, and when they do, because I know there was a particular young lady, she got a job, and they find out, they've been calling around and they find out, and what? The police gone after her. She had to start making payment to the bank. Mhm. And then I remember they had another case with a young lady who came to work at the bank and she never disclosed and her loan was quite some number of years and she never disclosed that she had a loan with the bank and was in an inactive charge off loan which she wasn't paying. And when somebody saw her name who deal with loans, they be like, but hold on, this girl have an inactive charge off mortgage with us. And she got fired because she didn't even declare that she had that. And she got fired. Yeah, so I don't know.
I was always curious about that because at some point,
Which
as long
other
as you
bank
don't
still
make,
coming after you? Oh,
they could come, but then it's your word against theirs, I think, or something
well,
like
no,
that.
it's up all the records. All the records they keep. They have them records, so you could say whatever you want to say. Them banks. That's why now you see in most banks they have legal counsel. In most banks now, before they never used to have legal counsel on staff. Now they have their own legal team on staff now. Most banks have their own legal team. Yeah. on staff. Ms. Strawn, you want to continue reading weakness of lending formula for me, please?
Okay, where we at? I was getting something to eat, so I lost. Where we at now?
Weaknesses of lending.
Okay. The weakness of using Campari is that it can be backward looking. For business borrowing, the lending officer also needs to go through forecasts of the accounts, including cash flow for several periods ahead to see if the borrowing can be serviced, that is, repayments made of part of the principal sum as well as payment of interest. For personal borrowers, this also means judging the stability of a person's employment and their capacity to earn at the level needed to service the loan. Professionals such as solicitors or doctors can show an ability to earn high salaries easily, but a production worker in an area of high unemployment may not, especially if fleeting overtime payments are needed to make the repayments. In addition, Campari and ICE does not consider a very commercial feature of lending that other acronyms such as PASS and 4Cs do. This is the relationship between the borrower and other customers. PASS includes expediency as a feature and 4Cs looks at connections. Clearly, a bank will not wish to solve its relationship with a good connected account by refusing a loan to, say, the managing director's son or daughter.
No, you can't.
Personal credit scoring. This is a practice used to help lending decisions for personal borrowers. Credit scoring is routinely performed as soon as an account is opened, aiding the decision whether to issue a debit card immediately. Banks or rather credit reference agencies 17 update and augment the customer score by analyzing account behavior once the account is running. In basic credit scoring for a new borrower, various characteristics of the potential borrower and the loan request are each given a rating or score. The numbers are then added up and read off against a range of risk probabilities. This range is calculated from past experience of the lender. Thus, a bank or building society may take a policy decision to reject all personal loan applications where there is more than a 10% chance of the loan not being repaid. The potential borrower score will then be read across to the risk percentage, showing whether the risk is within the 10% acceptability level. One benefit of credit scoring is that it is consistent and that its success or otherwise can be measured. In addition, the pass mark can be altered up or down as the lending or marketing policy of the bank changes. Direct or indirect banks use credit scoring extensively since they are unable to meet face-to-face with the customers. The scoring process indicates the level of risk associated with the proposition, not whether that particular loan will be a bad debt. Moreover, the scoring can also be overridden by a manager who takes other factors into consideration.
Thanks, Ms. Strawn.
Okay.
Thanks. Byron, can you continue for me, please?
Although credit scoring criteria are designed to measure risk statistically, they can be interpreted using the Campari framework. Campari seeks evidence of stability, length of time at an address, trustworthiness, occupation, other credit and monthly outgoings, ability to manage finances, and residential status. Insurance in the form of assets. Scoring is often done by computer, with the results shown on the screen to the bank operative immediately. This is very convenient for branch-based transactions and also for direct banking services using the telephone. Applications will also be vetted via a credit bureau to reveal any county court judgments or bankruptcy orders in the past. Scoring is also cheap to run. Per transaction, the cost to the bank is minimal when compared to the traditional relationship approach where a bank officer would interview every application. In addition, the whole system is scalable. It can be expanded to different products and branches or across platforms readily. Chapter 9 on delivery system showed how important speed of decision making can be, especially on internet-based transactions. And it works. Although banks may not support problems early enough or filter out all risky loans at the outset, those that use credit scoring for consumer products can show that the success rate in granting profitable loans that are repaid consistently higher than the traditional personal method of credit appraisal. In times of credit expansion or credit squeeze, or to accommodate different risk appetites, a bank can simply decrease or increase the pass score for certain products in order to filter out fewer or more bads. Behavioral credit scoring will add to and amend the score as time goes by on reviewing such things as bankruptcy. It is possible to discover one's own credit score at any time by applying to a credit reference bureau. Genuine mistakes in the files can be rectified, but a bad payment history cannot be hidden. Overriding is possible, particularly if the potential borrower is part of an important business or family connection for the branch. For instance, it would be foolish to refuse a loan to a director of a large company banking with the branch, or to the daughter of a very wealthy family solely on the arithmetic of a computer. The number of credit facilities open, banks share this information as well as more negative data on a default.
That's my computer going off. Right? Something happened. Hello?
Hello.
I guess something happened. He dropped off. Yeah. Already. Overriding is possible, particularly if, well, he read that. Okay. The number of credit facilities open, bank shares information as well as more negative data on the default in an attempt to avoid borrowers becoming overstretched. The repayment records on each facility, missing repayments and by how much they were missed. Court judgment for non-payment of debt since the credit was granted. Yes, so that's chapter 9, and that is finished. And I like I say, I'm going to see if I can put together the review questions by now and Wednesday, Thursday for y'all. So we'll only have chapter 10 to complete next class. And then we know so I'm going to try to have the review questions, because y'all, it's going to incorporate some of the questions that y'all had for the assignment. And like I said, the exam will only be from chapter 6 to chapter 10. It won't be what we did previously. So we'll just do the exam on what going forward, chapters we didn't do. And so those of you who didn't complete the assignment, please make sure y'all have it to me no later than Wednesday, if y'all haven't sent it to me yet, because I have y'all on risk to mark. So yeah. And so like I say, the exam, when is the holiday? Because the exam will be on the 19th. Let's see. Because I was telling my other class and they're saying, no, but Ms. Smith, that Monday is a holiday. So the exam, any of you have class on a Tuesday?
I don't.
I don't.
Because the exam will be that Tuesday at BIS. Yeah, so it'll be at BIS that Tuesday from 6 to 8:30. Which y'all is finished before, so the exam will be from 6 to 8:30 And like I say, once Biff send me back the papers, I will have the grades to y'all no later than that Thursday, once they send the papers back to me, because the only thing I'll have to do is mark your papers, and as I already have all the grades slotted, so we'll just be computing the final grade together with the final exam. Because I've already had the assignment, I would have already had the assignments. Once all that's coming to me, I will mark and have all the grades in place. So it's just be waiting for the final grade, and then I send it off to BIFs. They don't allow me to give you your grades. They say you'll have to come to them because they say some students is still have money for them. So they don't want me to give you the grades. I remember once or twice I did, and they say, no, they have to come to us. So in case they owe us, they got to pay before they get that grade. So that's what I will be doing. So I'll try my best to send you all a review sheet. And like I said, the review sheet will incorporate the 3 chapters that I just gave you all and whatever else we did from chapter 6. Yeah. So, yeah, but that'll be the review questions for the exam on the 19th. So I'll try to get it to y'all so y'all will still have ample time to actually totally review. Okay?
Okay.
Yes, ma'am.
Any questions? None. So good night.
I'll call you.
Okay. Oh, this Miss Swan?
Yes, ma'am.
All right. Okay.
Good night.
Good
Good
night.
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 Good night.
Good night.
Yes,